Let's take it to top that trade. The guys are here. Phil Flynn, a Fox Business Network contributor, and Alan Knuckman, the chief market strategist at bullseyeoption.com. Here we go, guys. Round number one, peak earnings. 70 S&P companies report earnings this week. Is the end of earnings euphoria near? We had such a strong start.
I don't think so. Some very positive numbers. And what's amazing is that earnings are coming out at 15% above expectations. Now, the long-term average is only 4% above. So these are some big blowout numbers. And what we're also seeing is profit margins are still near historical highs. So everybody had concerns, expecting a 40% growth in the third quarter. So this is all positive, and that's driving PE down because earnings are so much up, up, and up.
I guess it depends on how you define the word euphoria, right? I mean, we've had some pretty euphoric earnings seasons here. And if anything, I mean, not that this earnings season isn't going to be good. The question is, what are going to be the warning signs from these companies? Make no mistake about it. Supply chain issues are coming into play. That's going to hurt in earnings potentially. You got big companies that are going to have to look for alternative to get things on the shelf. And you have record-breaking commodity prices for the price of oil, foods, and other things. So at some point, that's going to weigh on the earnings outlook just a little bit.
Round number two, Whine. Supply chain disruptions strike again and could leave California wine glasses half empty. Are you a grain or a grape guy?
I can go with both. It depends on, if you're in the mood for a beer, go with the grains. If you want a little wine, that's good. But make no mistake about it. Now this supply chain thing's getting serious. We're talking shortages of wine, both red and white. I mean, and forget about Italian wines. I mean, you might have to start to go local. Maybe look at your local wineries, like maybe Hidden Hanger in Texas, or some of these local wineries that might actually benefit from the fact that you can't get wines from California. Listen, the bottom line is that we're going to see the prices of wine go higher. So maybe some of the companies like InBev that deal in spirits might be a good investment and a hedge, but a little bit tighter. And of course, your restaurant bills are going to be paying higher for everything. Food and now wine, your bill at the restaurant might be a little bit higher.
Problem is the labels. There's a very strict labeling procedure for bottles of wine, and they can't print the labels with the paper. It's just all snafu. So that can be solved eventually, but I've got a solution there. Put it in boxes. A lot of good wine now goes in boxes. I'm serious. I know this. I'm an expert. And I was looking at boxes online, wine boxes. Baba is the first place I looked. It come on over from China, and Baba's bounced 30% in the last 3 weeks, and it's still 40% off its high. So I think people will be ordering more wine boxes to put that in because they can't get the labels.
Spoken from a guy who spends more for a cheeseburger than he does a bottle of wine.
Round number three, pricing power. P&G plans to raise prices to beat inflation. What will that mean for this stock?
P&G is interesting in the fact that it's unchanged and it's actually negative over the last year compared to the rest of the market's rallied. So they've got some things here, some benefits. They've got pricing power because they're the big giant. They can force their suppliers to give them what they want. They can always raise prices on toothpaste and razors and stuff like that. And you're seeing retail sales continue to grow because people are willing to spend the money. The big concern of inflation, obviously, we talk about this almost every day. There are a couple of people that said it's the biggest threat. Paul Tudor Jones said that the other day. And there was another commentator, I'm not going to name, but he yells a lot. And he said it was worse than thought. It's astounding. But then again, he's the same guy that sold his Bitcoin 100% lower than where it is now.
I think if you look at what's happening with PG and EG, it's very concerning for the overall economy because that's the last place in the world you would expect to see prices start to go up. If you look at what's been happening across a lot of their product line right now, they've already gone through a period of what we call shrinkflation, okay? So when you look at your jars and your toothpaste, it looks like the same size, but you're getting less product. So now if they're, now they've squeezed out as little as they can out of the toothpaste, so to speak, and now they're going to have to start raising prices. That's negative for this stock, only because we're already seeing a major drop in consumer confidence because of higher prices. So there could be some pullback. Now, obviously, you're still going to have to buy their products, but you might not have to buy as much. And that's one of the reasons why the stock is floundering.
Here's your bonus round question for today. SPANX, now worth $1.2 billion. A founder, Sarah Blakely, inked a deal with Blackstone. How much money did Sarah have in her savings to start up SPANX? Was it $1,000, $5,000, or $10,000?
$1,000. Great American story.
I'll go in the middle just to be different, but I wouldn't be surprised if it's 1,000.
And it's Phil for the win this week. Thanks so much, guys. Business First AM continues right after this.
Start your business with $5,000 and become a billionaire. Isn't that America? I love it. See ya.
Go to businessfirstam.com for where to see our show on TV.